All right, g'day jet setters. That was the week that was. So here we go. As I discussed previously, you got to look back at the past videos prior to the 17th and 18th. That pattern of the 17th and 18th unfolded basically exactly as I said it would, as it happened. Well, as I said it would, but also as it has the past 4 months, right? You know, boom, 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 boom. The difference, of course, this time, which as I said before was, which I said on the 13th, was if the selling does what it has the previous things, where it's basically like 2 to 3% in here, 2 to 3%, then it would break this long-term trend line and also the 50-day moving average. And so it would leave the market in a bit of a quandary because it would cause some technical damage, and then when the seller disappeared, it would be a little bit more tenuous as far as where it would go. So as you can see, it's bounced back, but still hasn't broken some of the resistance lines. Now, just the other thing that I'll point out is when we look at the longer time scale going back to the GFC. This is something I pointed out in one of the other videos. It really is absolutely, I mean, it's boom, 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 and right up here, sorry for the noise on the chart here, but it is right on the ding, right on the dong of that level there that it's rejected. So the market still is in a bit of a just feeling the aftershocks of that selling, which you can see where it bounced back on the previous 4 times, and it's bounced back again, but it hasn't recovered sufficient to undo the technical damage that's been caused. Now let's just have a look at the real market, the futures, which trades 24 hours a day. Well, got 22 hours a day as opposed to just a third of the day. All right, now when we talk about technical damage, this is what I mean. There's been technical damage. So when we go back, right, even from all these lows, you can see where it hits a little high, shoots through, comes back, retests it. This high here, right, it left a bit of a gap there, but it did have a little retest just in here, like a quick one. Here that high kind of came through, retested it, right? Here it had this high, came off it, came back, retested it. This high here, it came back and retested it. These highs here, it came back and it didn't retest it. It tried, but it left this gap here, which I've been a little bit uncomfortable, shall we say. This high had another go, it came back and it retested it, and found that support successfully. So when we talk about technical damage, we can see here this high, which it came through and then retested here, it's been broken. Right? And this high here that it had a go at, retested, it's been broken. Right? So this high obviously hasn't been broken. But you can see how the technical damage that people talk about, how it is unfolding, where it's not just a case of a lower low here, right, lower than here, but it is these step ups where the market hits some resistance, it comes off it, it has another stab at it, goes through, comes back, and uses that as as support, right? So here's same thing where it hit it, it came down, that leg down there, same price action here, right? Comes back up, jubs around a bit, comes back up, jubs around a bit, then it goes through, bounces back, goes through, bounces back, here goes through, bounces back, goes through. Instead of bouncing back, it comes back down. And so there's been damage at this level, and there's been damage at this level. So if the damage persists, we're looking down here, 42.38, and if that doesn't hold, then filling the gap here. So that's where we are in a technical sense, and this is the level here, which is the one to keep an eye on, 44.80-ish, something like that, in the in the future. So the cash market's just a little bit higher to see what happens. As I said, on the way down, it's done a similar thing where it has gone through this level, come back and tested it, right, and failed, come back down and made a new low here, come back, tested it again, tested that low from here, came back down, come back up, tested that low here. So it's at a critical junction now, whether it's going to recover from the bout of the selling on the 17th and the 18th and move higher or not. Now this retracement, it's a bit of a 61.8 from memory, yeah. So it's, you know, if it goes back here, that's a deep, and particularly if it goes through here, then it really is on for new highs. So there's about a 50-point, you know, give up there if you want to go short. I'm square the S&P at the moment. I don't have anything on. But if it starts moving down, it might be time to get on the bus. So that's the S&P. It's a critical juncture this week. The level to watch here that I'm watching is this basically, you know, 44.80ish in the future. So if that's 44.90 or so in the cash market. When we look at the Aussie market, you know, same but different. It's got a little bit of a gap here, bigger gap down here. I don't think it's gonna reach it, but the level that it came back off, this, you know, 7,200, that was the March high. The one where I've got my mind on this 6,900 level, it actually goes back to the, I mean, look at that, it goes back to the GFC high there. It looks pretty magnetic to me. That kind of level looks very, 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 you know, magnetic, as in very attractive for the market to go back down to. I mean, still got reservations, but, you know, this really, as with the S&P, there's serious technical damage that has happened, and following through that, to me, I mean, that looks very likely, and that looks actually pretty likely on a whole lot of levels. Same as in the S&P, where, you know, with this technical damage, and particularly on the way down, when it's hit a level, bounced through it, come back, resistance, busted through, hit resistance, come back down, and it's the same kind of level of you know, retracement there. This is a bit deeper. There's 100 points give up between the futures and the cash market. There were a whole lot of dividends, 100 points worth of dividends that came out here. So if they hadn't have come back, then it would be up at the 61.8. Just got to keep in mind the Australian market is very rich in dividends compared to the US, so it's more of a factor when you're looking at some of these things. That's the Aussie market. I think, as I've said before, as I said last week, I'm short the Aussie market. This was a level here, this 73, 70-80 level that I had my eye on to either get out or double up, and I doubled up. The levels that I got was about, I think it was 73.36 from memory in the futures. It was 73.36. It was just in here. So I'm short here, and nervously so. The risk reward's good, I think. You know, if it goes above here, then I'm out. Like, you know, so, you know, I'll dust like, 40, 50, 60 points there, which I won't enjoy. But if it does follow through, then the downside is looking pretty good. Having said that, I'm not overly confident, given the size of the position that I've gone, which is a bit larger than normal. And you can see this is the price action that was on Friday, where it did struggle to kind of break through that 72.70 level. It had a bit of a go, came back and closed at 7,300. This, look at that, double head and shoulders. I'm seeing them everywhere now. Why not? So it could easily, I think, from there to there, 73.50, 72.70, that's 80 points or whatever, 70, 80 points. That kind of starts taking it down a bit further, 72.70. So yeah, it's about the same length, like 80 points. That would be a bit of a classic level for it to come back and test. I could see it testing that pretty easily on Monday. Fingers crossed. So they're the equity markets. Short version is key junction for all those equity markets in terms of whether they're going to follow through or not. There's whether we're facing this kind of scenario with a follow through there, which is basically the same as what's going on there, to fill in this gap here eventually, or whether these little long-legged candles here are just going to like play back and turn out to be like another great buying opportunity. So far, I've done all right. Time will tell as per usual. Let's look at the currency, the Aussie dollar. The Aussie dollar is still in a bit of no man's land. I squared up in the Aussie. It was just hanging around in no man's land a bit too much. And there was a few things in, let me just go down to around that 73.20 level. This level, it just looked like a little bit like it was forming like a bit of a base, where it bounced off 3 times off that 73, 22, 23 level, and it had that bit of negative divergence. The thing was strengthening. To me, that just looked a bit of a like it was forming a bit of a bottom there, ready to go back. And I thought, look, there might be a better level to re-short it. So that's what I'm looking at. I guess if it breaks down below 70, I'll look to hop on the bus again and get short. So I'll give up a little bit just from being out. But the Aussies oversold a little bit comparatively to our equity market. Normally they track kind of pretty closely just in terms of that global risk on, risk off proposition. And the Aussie did sell off a little bit more. So I'm not quite sure what's really going on there. But there was but I guess my chips are on the table for shorting the equity market rather than the currency. Time will tell. Lastly, let's have a look at the bonds. There was quite a move in the bonds, and I hit that level that I've had at my eye on for a while. It's 42 level, and you can see it just totally like rejected it. Not in a big way, right? But given that leg up, that was the level that it hit, and this is the way in which that's the way these markets have been going, and they do all the time, right? Whereas support goes through, comes back. It's like a magnet to come back to resistance there, and you can see it, really like on these bigger, time scales, where it's hit support, it comes back, breaks through it, and it has this kind of resistance, a bit of noise there, comes back. That's where it breaks down from. That support, when it kind of breaks down from there, it kind of comes back like there, that support level, came back to there. Breaks there, comes back to it, a little bit higher. This level here where it bounced off, came up that level, which is back there, comes back down, comes back up. So they sort of ratchet down. That's kind of what happens. I've still got my eye on a level like up in this zone for our bonds. I do think that there's quite a good chance for it to break. It's a long-term position for me. So although if I was a bit more short-term, I'd be cashing it in here. But I don't want to. I'm just going to leave it. No, it's a bit of a bottom drawer kind of proposition. Anyway, so that's the equity markets, the currency, and the bonds for the end of this past week. We'll catch you during the week. Okay, ciao.